Hi, this is Lara at Elliott Wave Gold with your weekly US oil analysis done after New York has closed for the day for Wednesday, 4th of September. I'm recording this video now, 9:45 PM in the evening, New York time. I still have the same daily wave count for gold. Price movement below this point, 108.17 I think, invalidated my previous daily chart. That's where I had my invalidation point. I was expecting we had a 1, 2, 3, 4, 5 wave impulse completing upwards for minor wave 5. With movement back into wave 1 price territory of minor wave 5, the structure is not an impulse, the structure is probably an ending diagonal, an ending expanding diagonal. There are only two structural possibilities for a fifth wave, either a simple impulse, which is most common, or an ending diagonal. Within an ending diagonal, all of the subwaves must subdivide as zigzags, so that's the only time you're going to see a third wave labelled an ABC zigzag, anything other than an impulse. And within a diagonal, the fourth wave should overlap into first wave price territory, but it can't move beyond the end of the second wave. So if minute wave 4 does move lower, it may not move below 103.51. The most common correction level for second and fourth waves within diagonals is between 0.66 and 0.81, the length of the first and third waves. And so far for this structure, minute wave 2 is a 79% correction of minute wave 1, nicely in that common length, and minute wave 4 is 77% the length of minute wave 3, also within that common range. It also looks like price has found support at the lower edge of this parallel channel. Keep drawing it on the daily chart and copy it over to the hourly. Draw the first trend line from the high of 1 to 3, place a parallel copy on the low of 2. It nearly shows us where minor wave 4 almost found support, fell a bit short of it. Slight overshoots here, and again perfect support up here. For this wave count, I'm expecting a final fifth wave, a long drawn out zigzag structure which may end around about the target zone. At 122.55, intermediate wave C will reach 2.618, the length of intermediate wave A, and at 120.84, minor wave 5 will reach 2.618, the length of minor wave 1. Let's have a look at this possible diagonal structure on a 2-hourly chart for this week's hourly analysis, where the start of it down here is this point down here. So far we have what subdivides quite nicely as a zigzag up for 1, no ratio between A and C here within this zigzag. Within minute wave 2 zigzag, there's no ratio between A and C at minuet degree. Within minute wave 3 zigzag, minuet wave C is 0.47 longer than 1.618, the length of minuet wave A, and within this fourth wave zigzag, the C wave is 0.27 short of 0.618, the length of the A wave, and both of those differences are less than a 10% variation. It looks most likely that minute wave 4 zigzag is over here. It's a nice completed structure, and it's within that 0.66 to 0.81 range of minute wave 3. It is possible it could move lower. I think that's unlikely, but if it does move lower, it can't move beyond this end of minute wave 2 for the diagonal. Movement below 103.51 would invalidate this wave count. This diagonal is expanding, the third wave is longer than the first, and the fourth wave is longer than the second, and the trend lines are divergent. Because the diagonal is expanding, we'd expect the fifth wave to at least reach equality with the third and likely to be longer, so we're likely to see price movement above 114.27. When we know where minuet waves A and B within the zigzag of minute wave 5 have ended, we can use the ratio between A and C to refine and recalculate that target on the daily chart. Because the diagonal is expanding, I'd expect the fifth wave to be time-consuming. It may take a few more days yet, maybe more than a week or so. And then again, we'll have to look at the possibility again of a big trend change for oil. That's all for me today with your oil analysis, and I hope that everybody had a fabulous day.